Hello and welcome to the next episode of Price Action free course based on market cycle methodology. Okay, in last episode we talked about three cycles through which the market goes. So to just review it quickly, told you that market goes through three cycles. The first of that is spike, a few very strong candles, upward or downward, and then it goes to the next cycle, which is channel, like this. You see, there is a channel here, and then it goes to the last cycle, which is a trading range, like this. There can be different scenarios for the trading range, or like this, for example. And later we will see that a trading range can be formed also like this, which we will see this scenario in last episodes of the course, because it's a bit tricky to recognize it, and we will talk about how to enter a trade. But if you recognize this pattern, you can enter a very good trade with very good risk to reward ratio. Okay, so it was a quick recap. Today we're gonna talk about spike, the first cycle of market cycle methodology. So actually these spikes are called breakouts, or the breakouts are called spikes in this method of trading. Okay, what is a spike? Imagine you have a support or resistance zone. For example, this is a support zone. The price can go through two scenarios. First is respecting this support line. So the price comes here, the buyers will buy the asset, and the price goes up. We are not talking about this today. We are talking about the second scenario. Price goes toward this zone, and without respecting it, or with something like this, for example, or like this, it breaks it with very strong candles, like this, for example. I make it red. Even more red, like this. And shadows, for example, like this. So if I move this here, this candle is formed like in this move, and we can see the strong breakout of this zone. So let's see some examples. So this breakout is this a spike. So this spike is kind of breakout. So let's see some breakouts in the chart. Here, for example, there is a resistance zone, and you see with strong candles. This strong candle, we see a breakout, and then this spike, strong candles, and channel, and then trading range. Here and here. And then breakout again, and here is a micro channel kind of, and trading range between here and here. Then breakout, a spike, then a channel. Here there is a channel, you see, and trading range. Okay, here there is a trend line, breakout, and so it's a spike. Some more examples. Here the top line of this channel, spike, again channel, and trading range. Here this resistance zone, spike, very strong breakout. You see, we expected the price to be rejected from this resistance zone, but we see without like respecting it or with some kind of minor corrections, the price crosses it with very strong candle. You see, this is very strong candle, very strong long candle, and it goes through channel here. Bottom line of channel. In next episode we will see that this trade is possible by drawing this trend line. When we talk about channels, we will explain this with more details. Okay, some more examples. If I find very good clear breakouts. All of these spikes are breakouts actually, but I'm searching for the more clear ones. And if I continue this top line of trading range, strong candles and changing the character of the zone. It was resistance, now it's like support, and we'll see how the market reacts. So it was there were some examples of spikes. Let's find them in other charts like USD, for example. Here, see, it's a spike. The spike is formed because here there is another spike. See this line broken by a spike, then bottom line of channel. This channel is broken by another spike, then here next channel and trading range here and here, then a breakout, strong candles, channel, and sign. Okay, can extend it like this, and then a trading range here and actually I will do this like this, and here we see a trading range. Some more examples. This support zone broken by this strong candle, then so it is a spike, then channel, and then a trading range. them a bit later, it will be better. Okay, again, I have a spike here. If I draw a trend line in here, then I extend it, then I extend it more. Here there is a spike, channel, and trading range, which has been broken by this spike. Here, a trading range here, broken by a spike, then channel, and a trading range. And we see when it's broken by a spike, again a channel, and a trading range. Very big trading range. If I go one time frame low, in this zone and this upper zone. Here in 5 minutes time frame spike, we had this support zone broken by a spike, so we go through channel after that, and then a trading range. As you see, the market is always going through these three cycles. These cycles, sometimes they have overlaps. So for example, in this like trading range, you see this trading range is formed on the top of the bigger trading range. So when it's broken down, we can enter a trade till the bottom of this bigger trading range. Here, for the last example, here there is a zone. Then in next episodes we will learn why this is a zone, then spike, channel, and a range. In here, and here. So we see all these zones, like the major zones, they have overlaps, so we more or less know when to buy, when to sell. So we know when the price is cheap, when should we enter, and when should we exit actually. But remember, it's all based on it's not based on certainty. We are not certain about anything. You see, a zone can be broken, but most of the time, you see, one time, 2, 3, 4, 5, for 6 times it worked, and then it was failed by a spike. And here the top line, 1, 2, 3, 4 times we could sell in a high price. So it worked 4 times. Then you see, for the 5th time the price didn't arrive to it, so it failed after 4 times of working. So these zones, which you will learn in next episode, especially in the episode related to trading ranges, you will learn them. But for now you need to just see the spike. I don't expect you to draw all these zones. I just expect you to go on the chart and find these a strong downtrend, or if I find a strong uptrend on gold, I think I'll find it. Okay. Or this strong uptrend breakouts. So I expect you to go on the chart, just mark these strong candles. Like with this tool here, you can like mark them like this. Here also it's a spike, strong, see strong candles one after another. Here also see strong candles, strong, here a strong downward spike. And so I expect you for like the exercise, go on the chart, different charts, different time frames, whatever you like. You also can go on cryptocurrencies, for example, like Bitcoin. In all the assets, you can find these structures. So you can, here, for example, on Bitcoin, you see spikes here, strong candles, breakouts. Then, when you found them, try to find also the zone which is broken by them. For example, when you signed it, if you look in the on the candles before that, you will see here there is a zone broken by this spike. See, a resistance zone broken by this spike, and then here, see here a resistance zone again between this high and this high, broken by this spike. Okay, for exercise, I recommend to go to different charts. You find thousands of or hundreds of these like structures. Just I want you to get used to seeing them and recognizing them very quickly on charts. And then in the next episodes, we will talk about the next two cycles, which are channels and trading ranges. One more thing about these spikes, usually, not always, usually, the price goes back to the broken zone. For example, if the spike broke this zone, usually, not always, sometimes the trend is so strong that the price won't go anytime soon, won't go back to that zone, but many times the price goes back to this zone and then continues. We call it pullback to the broken zone. So it has a supply and demand reason, because here there was a resistance zone. So one touch, two touch. Here many people would think it's like a resistance, so they enter short position or they sell the asset. When it's broken, when the price goes back to this zone, their trades will be in zero profit or loss. So they go out of the trade. Okay, so they sold the asset here. When it's broken, coming out, they go out of their sell position. It means they are buying. Closing a sell position means opening a buy position, and vice versa. So when they keep closing their position, which means they are buying back, it means there is a buy pressure here. So it acts as a support. So we call it change of character of a zone. So a broken resistance zone becomes a support zone, and vice versa. A broken support zone becomes a resistance zone. Let's see some examples. here and euro. Usually in in forex pairs like euro USD or other currencies to currencies like forex pairs, you see more like this phenomenon because they are almost always range. But in gold or Bitcoin, we might not see them because they are always in trend, on trends. Okay, so on euro USD, okay, if I find something, here for example, you see a broken zone by a spike, and you see this support zone here is broken by a strong candle. When the price goes back to this zone, you see it's rejected. It acts as a resistance. So there are sellers here. They bought here because they thought it's gonna support the price, and there are buyers here, but they bought, but the support zone was broken. When the price goes back, they will be in zero profit or loss, so they close their positions. Closing a buy position which was taken here means selling that asset, which means new sell pressure. And this here what happens. Okay, so after like finding these spikes and breakouts, try to find the zones which have been broken by those spikes. Then try to see if the price went back to that zone or not. Okay, this was for this episode. Sorry for the delay for publishing new episode. We will continue producing new episodes a bit like faster. Thank you for listening to this episode. I'm Khosrow Sokhanvar, investor and trader in financial markets.